Hello, hello, hello. Usual technical difficulties here. Jag is just about to join. We'll wait for you lovely people to jump on. Let me know what's happening, guys. How you're doing. So we have the Fed is what is happening. I know you guys have been doing today. Did you trade? What's going on? We'll wait for a few people to jump in before we start discussing what the Fed's going to do. And also let me know if you guys want me to bring up the stream so we can watch it. Hey mate, so relatively weird session to be honest. I traded a bit like a dick earlier today, but ended up flat on the sesh. There was a big spread happening, basically buying of the short end and selling on the long end. And my predictions today, obviously the 25 basis point cuts is odds on at the moment. So they're going to cut the 25 basis points, but that's not what the main concern is. The main concern is going to be the dot plot. So in essence, the Fed's going to come out and give us an idea of how many times they're looking to cut next year, or if they're going to cut at all. So it's not the 25 basis point cut, that's already priced in. So the market's already priced in, say, two cuts next year. But with tariffs, Trump in play, we'll need to see what the Fed is going to say. Obviously, the Fed don't predict; they basically only react to the data that comes out. The data has been extremely strong, though. So the one thing that they're going to watch is the unemployment numbers, without a shadow of a doubt. So I've got basically a few notes brought up from there that I'd made prior, just in general. So we need to see if they're going to give a dovish or hawkish tone. I think if they come out and say that there's a potential that they don't cut at all, right, then the market could really, really take that negatively in bonds. So we should see what's happening. If you guys want to let me know if you can hear okay, how's the mic, everything all good? So basically, if they come out and say that the data is the data is really, really strong. However, we're watching the unemployment numbers, and they're obviously going to say something along the lines of, we need to rely on data in order to guide us. The standards, Powell doesn't really get anything out of line. They're going to ask him questions about the Trump setup, and he's going to say, you know, our job is not to predict, we need to wait for the data. And he's going to ask to comment, and they say, our mandate is to take control of monetary policy, nothing to do with politics, that type of thing. So yeah, Jagger's just about to join us, I think, directly.
Yeah, good evening, guys. Good evening. Can you hear me?
Yep, let us know if you can hear Jagger okay. I think you should be able to. Let me just double check, mate. Give me a bit of testing.
Hello, hello.
Yep, it's come through. So you should be good to go.
Perfect.
So yeah, what's your thoughts on the Fed? I was just giving a basic idea. My kind of general outlook is the market's already trying to price in two cuts next year, plus the 25 basis points. They've already ripped off 100 basis points in general since the start of the cutting cycle, and we're going to see if they're going to come out with potentially more than two cuts next year, because the 25 basis points is odds on at the minute. They're definitely going to cut, but it's more so the dot plot of how much they're going to cut, or if at all, next year.
Yeah, of course. We see, because what are the expectations for the next year? What is the tone from Powell, if he's hawkish or dovish? I believe that gonna be kind of hawkish, I think.
I mean, the data's so good at the minute, right? So I think obviously the next one is going to be what they're going to say for Jan. And I think the unemployment number is the only number that is, going to twist their arm, because unemployment has not been the best. The labour market as such, that's about the only thing. But everything else is smashing out of the park, right? So it's not really the conditions where I can imagine they're going to say, oh, we're going to do like 5 cuts next year. You know what I mean?
Yeah, it's not the condition to say cut every next meeting. They are gonna be very, very cautious.
Yeah, exactly. And I definitely think that if they come out extremely hawkish and say anything at all, like, um, if the unemployment number comes in, lower or whatever, then we potentially may not cut at all. For coming into the start of the year, the market will take that. Stocks will moon, treasuries will dump, yields will go up. So we'll see what's happening. Avi, how's it going, dude?
How's the dollar? Oh, the dollar made nothing today. It was a nice spread trade that Brando in the server did with the euro.
Oh,
Is the
nice.
dollar at the top?
What
It's basically
did he
retreated.
buy what was spread? Did he basically just buy the basket on DXY
He
and short the euro or whatever?
bought the euro and shorted the DX futures.
Nice.
Oh.
No problem, Avi boy.
Let's see. Yesterday high is close on the 10-year, 5-year. They gone above.
Mm-hmm. Yeah, we're
But
pretty much complete flat in the session on treasuries, especially with safe havens as well. Let me recenter because that Swiss francs all over the shop. Yeah, so fireworks time. Hello, dudes. How's it going, Brandon? We're just discussing your Euro spread trade, which is nice.
Yeah, yeah, Brando. I was saying that it was a very nice one. Essentially, if you kept it, wow. Kept it longer. On a day like this, who knows?
Yeah,
Better safe than sorry.
interesting to see. I mean, the speech doesn't happen till 2:30, right? Did we just get the initial popperoo? And we'll see what's happening. I have got this other stream up. Let me just do this. Hopefully, I don't get copyright smashed for this or whatever. But we'll soon see.
Oh, there are so many streams about it that publicly restream that. So I don't think we're gonna have any problems. So
Okay, I'll pop it down here in the from the 2 year. I could maybe make this a bit smaller.
I sold the tens on the ZB just after that pop into 12, basically only because it was that 12 and the reaction just after. And yeah, I got out at 08 on the first move down. But then eventually my target was 06 because there was a big iceberg left at 06. Which is curious because it then got back into 11, 10. There were a lot of buyers. Then the iceberg moved to 09. It increased in size, like nearly 2,000 contracts, and they just smashed into it, and it gone 6.5.
I'm just gonna have a look and see if there's anything out prior. So we've got this coming out here. We're expecting a 25 basis point cut, so we'll see what they do. It's been actually a nice fade here from yesterday's POC back to current day's POC. It's been bouncing about that range, to be honest, and a nice little 3-4 ticker. But yeah, hopefully none of you guys get too burned today, as it's been quite a ropey session. There we go. There's the book just decimated.
90 seconds.
Let's see which way the market takes it initially.
Now imagine if they don't cut.
Wow. Yeah.
That will be like
Crazy, yeah.
crazy.
Yeah, so quite near the highs, so we could see a dump Peru and faff around in the range, or we're going to extend straight away. Let's just bring this up here. Yeah, we have minute. You know these absolute madmen that are buying and stuff right now? Buying and selling crazy.
The 10-year are empty. Empty completely.
Absolutely empty, yeah.
Absolutely not.
I always get a heart attack when this happens in case I've got any open orders, but
Well, actually, if you're brave enough, you can scalp these the 60 seconds before.
oh, no chance. You're asking to get your ass handed to you there, man. Jesus. Okay, here we are. Let's see. 10 seconds. Look at this book. There's nothing there. It's basically down to NQ. Here we go. Wow.
Oh, whoa, 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 whoa,
Oh,
whoa, whoa,
what's
whoa,
happened? Is there no cut or something?
whoa, 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 whoa. So, 25 basis points.
Yeah.
Okay.
The market's taken it extremely, but there's nothing else to. Wow.
They are seeing only 2 cuts next year, or just 50 basis points cuts next year.
Wow. Okay. That's
Okay.
that. That's the answer then.
They are seeing lowering unemployment next year by 0.1% difference compared to September projections. The end 2025 PCE inflation at 2.5% versus 2.1%, so they're seeing higher inflation.
Yeah, it's
Makes sense.
super.
Look at UB, the 5 years. Wow.
Yeah, the 5 year is just absolutely melted. What about the?
Melted completely.
I'm just gonna drag this down here. Look at that, just down to 22s as usual on ZB.
Yeah.
Wow, that was a almighty
Man.
dump, eh?
Yeah,
To be
almighty damn.
to be fair, I mean it's all very well in hindsight, but the data's that strong that there's no danger they can come out and say we're cutting more than twice. And to be honest, if Trump comes in and he starts going bananas,
I
it,
got long at 28, out 31. Nice. Oh, yeah, the yields are coming back.
we're bouncing back.
Fantastic. Ah, that's why I was silent for a few moments. The 10-year is printing nice positive delta from the bottom. Half of the dump on the ZB is gone.
Yeah,
Yields back to where it started, so right, nice fade because we had that basically in hindsight is easy to say, but we priced in this all of this last week basically.
yes, exactly.
Like you said multiple times, the market is already telling that the Fed is not gonna cut as much as they said.
Yeah, completely. So the thing is, it's not even. So now they've come out and said that we're only looking to cut twice, and that could actually be not at all, to be honest with you.
Ooh, I still feel excited about the Fed trade.
I do, yeah. I normally like to wait till a bit after if I'm to trade it, but you know, it's so out of character to trade at this time, really, unless you're in a tight range for me. Because I mean, it's an hour.
Mm,
It's an hour to bond close, man.
yeah, that's also true. Oh, the 5 years dumping, regardless. It was also a nice short for a continuation overall. Nice.
Wow.
Well,
As always, if you're going to play, in my opinion, if you're going to play a treasury play with news, you need to play the 2 or the 5 year. Be-
right.
because it literally will move like double everything else.
And straight.
And straight, yeah. Yeah, exactly.
It didn't reverse basically.
Yeah. And that's basically what you're hoping, I suppose, in terms of data points. This one is actually quite clean because like NFP, where it will give you a like in treasuries, it will give you like a 20 tick boof up to the top, and then it'll just shit itself. Whereas this one, it's just straight down.
Ah, I think that we are going need to get used to these too short. Like for serious. Not even look for longs.
Yeah, exactly, exactly. I
uh,
mean, now we've got nothing really below us, to be honest. So we're just in free fall. In the last,
oh,
this is the lowest it's been in a while, right?
yes, it's dumping a lot as well. Whoa, 30
Aaron,
points down. More.
oh, is it? Wow.
What I'm saying, man. This is down. How much is this? Oh, okay, 30, nearly 30 points down for the yes. Oh, wow. Just straight what?
Straight as well. Let me just have a look. It's
Wow, this is huge. So it looks like the 5 years.
wow. It's absolutely dumped, right?
Absolutely.
Gold is getting absolutely hammered as well. Dollar to the moon.
FESX, the Euro stocks is holding in the middle of its days. Currently plus 90 ticks still on the day. But I think it's gonna catch up. Bund
Let me just bring up
down.
the. I'm just going to bring up the profiles here a little second so we can have a look at them. Just to we see how much they've actually moved. So this is ZB. This is the 10 year and this is the 5. Look at the 5 year, it's just absolutely melted. So you can see if you are to take the news play that the shorter end moves much more. I was actually net short today as well, quite heavily. If only you'd have held it. Yeah, it's never gonna happen.
Nah.
To be fair though, if I was a betting man, I would have bet on the this. To be honest,
Mhm,
you know what I mean. The fact that Trump's coming in, the data's really good. The only sort of meh number is the unemployment number.
Right.
But as you know, what typically happens a lot of the time is they like to go one way, and then when Powell then speaks, it then tends to go bananas, and then as soon as he's done speaking, it then tends to reverse. I've noticed that the last recently, but treasuries will probably not do that. Just be interesting to see if we can actually find the bottom here. Also, there's just about a million contracts down in the 10 year, which is surprisingly is not that much. It's an average day so far.
hmm hmm There is still a possible play if this continues down, but yeah, shorting into the bottom, then you could play the catch up on the 30 year on the UB or the ZB
I think the moves
if the
already.
curve is out of.
I think for me, you either were on the ball and you basically sold into the pullback initially. That was it. I don't think there's any more. I mean, maybe in the next 20, 30 minutes once we establish a range and pop back to the upside, but it's you know the play's already happened. You know what I mean? Buying this right now,
Yeah.
in my opinion, are just asking to get.
No, I mean selling the 30 year.
Yeah, yeah. So yeah, it's for the catch up to then push down. So we're at 22s here. This is an important level. Let's see if they can hold this. Because if they hold this, there we go.
Go now. yesterday low,
Mm-hmm.
trying to defend. I don't know, for some reason, when these huge dumps happen, I done that on the ES as well a lot. I tend to fade it
Yeah,
on
no,
on the covering.
I'm the exact same. I tend to fade it as well, but honestly, over the years, I've learned that you need to either. This is just me personally, but you either need to if you're gonna play an event like this, you need to be ready, already have done your research on the news and know what you're looking for, and then you either need to get in right as it happens, um, or within the first couple of minutes and then let it play out. You know what I mean?
Sure, absolutely.
Because for me personally, when the market's super extended like this, you know, this type of action is the opposite of why I trade treasuries. Do you know what I mean?
Absolutely, yes, yes.
So for me, if I wanted to trade something like this, I either need to hit the 2 or the 5 year. Um, yeah. I mean, don't get me wrong. You could say you can make a lot more returns doing this, but again, the risk is mental. This is trading like ES at the minute.
I
Well,
think I don't have the balls to do that, to be honest, but like expecting something very, very huge to happen, so it potentially can shake the treasuries at least half of the daily range. If
y
you put a stop order, buy and sell,
oh,
maybe skewed to the part that you want,
yeah,
like 4 or 5 ticks below the current price that is before the news release, you are. But well, I
ZB.
mean, for sure it's gonna be faster than clicking, but uh,
Yeah, no, definitely no. I think the way to do it is say you for me, say I was to trade 10 or 15 lots on the 2 or the 5 year, right? Because it's half the size of the tens, right? I would maybe, I would clip like 25% to start. If it goes with me, then I'll add as I go, because you've got that much room to maneuver in this. You just need to get the direction correctly.
mhm.
And the whole reason for it with the 5 years, it goes double everything else. ZB is stopping here.
Right? Yeah.
Hmm
22, the magic 22.
Yeah, we could potentially see a pop back up to 28. So this could be a nice long. But when does Powell start speaking? In 2 minutes. Yeah.
Uh, isn't it starting in 17 minutes? 8:30? No, no.
No, I think it's quarter past. I was wrong. Isn't it?
Oh,
Well,
quarter past.
yeah, quarter past. I think, anyways.
Anonymous is asking, so if rates drops, shouldn't bonds price rise?
Yeah. So sadly, it's not as it's never as easy as that, mate. It's not. So basically, the Fed is to react, not really to predict, right? And the markets basically to try and price in where the Fed is going to be in the next 4 to 8 weeks. So you really need to, in order to trade treasuries and to actually do these plays, you really need to understand your shit when it comes to the central banks, what they're doing. You need to be following the data that's coming out. So just as an example, the data has been extremely strong for the US. Then combined by the fact that Trump is in, he is just bullish in general for the economy, which causes higher inflation, which in turn uh, is a sell-off in bonds. So basically, treasuries don't like inflation. They, because money then goes into yields. Wow. Money goes into yields, and also more money goes into ES, so the bonds become less attractive. Um, so the key thing that is going to be asked today is going to be with Powell is right. We can see that you're potentially looking at two cuts. Is there is there a potential for you not to cut at all, or what's it going to take to do that? And then he's going to do his usual, speak for an hour or whatever, and not really say too much. But he's going to have to say something this time, man, because there is the data. It seems really weird how strong the data is, right, at the minute. Do you agree with that, mate? How strong the data has been as of late?
Oh yeah, there is no. So basically, they have a dual mandate. One is to beat inflation, and the second is to maintain employment. And despite the higher rates, like you say, that they see that the economy is still strong. So why not keeping the rates higher? And since the markets are forward-looking, and whatever the expectation the market might have on the current situation is already priced in before even you realize, the markets anticipate simply. So if the data so far has been strong and there are worries of higher inflation, the Fed, okay, they cut 25 because they cut 25 now. But basically the expectations for the next year are changed, because while they were claiming to cut much more, I don't remember what they were supposed to cut next year. Do you remember? 4 times? 5?
Yeah, 4 or 5 times, yeah.
And now they said their target is to decrease the rates by another 50 bps. So that's gonna be or one 50 bps cut or two 25 basis points cuts. So that's a big change for next year. It sets the tone for the next year, and since the market anticipates future, that's why the reaction today is opposite, because the 25 cut today was widely priced in weeks ago. It doesn't change much, to be honest. Just like the other day, the ECB cut, the reaction on the Bund was the same. That was largely priced in.
How is this possible that I can't hear YouTube? Yeah, I can hear. My audio setup is just mangled. Honestly, I need to fix it.
Somewhere in the audio settings, in the taskbar, you should have one of your 12 devices
The
set
problem
for.
the problem is if I fix YouTube here, it's probably going to break the stream. Settings. No. You can't hear this, right? Can you hear this? No, surely not.
Hear what?
The YouTube on the stream? No, because I can't hear it, right?
Yeah, I can hear it, but I was muted. I mean, I had the YouTube muted because otherwise I was hearing us with a 5-second delay. Yeah, so
This is wild. This is just not. Oh, we've seen a bit of a bid in the 2 year. Okay, and the 5 year, nice. So we should see a bit of a pull off here, all the way down to 18s. Now we try and see if we can reclaim 22s and then 28s.
surprisingly, UB is, for whatever reason, it didn't get past the release, the spike. Holding strong, didn't even touch yesterday low.
Mm-hmm.
Oh. And the 10-year stopped right on the S2 pivot point to the tick. I'm always surprised by how this simple stuff work nicely on slow, difficult to move markets. Um, much more simple. Why I spend so much time on the yes?
Can you guys hear the YouTube stream, the Bloomberg Fed cuts by 25 basis points? Yeah, it is. I'm just double checking that you guys can hear everything because I need to sort this. I'm gonna do it after the stream, to be honest. So my mic's working. Jagger, can you talk? Wait a second.
Yes, yes. Hope, hope, hope. Do you hear me?
Mm-hmm. Mm. I'm gonna need to add this onto Chrome or something here. Can you hear the can you hear this on the stream? Can you guys hear YouTube at all? Barely. No. Okay. Let me turn it up and let me know if you can hear it.
Tell me.
Can you hear it now?
Wait, because it's delayed. Nothing.
Okay. I'm gonna need to go and add it into. Give me a second. Honestly, Chrome browser.
Hmm. I have no idea why the audio from YouTube is not getting through. Um, probably.
Wait, you can actually hear it. Right. I'm confused. Can you? Is there any audio coming from this or not? Because when it's actually moving, it should be capturing audio, but it's not. Is it Chrome media source browser?
It's weird because and you yourself can hear it in your headphones
Mm-hmm.
because on OBS it should be capturing that audio
Exactly.
uh, from where it takes my voice.
Yeah, exactly, mate. Ah, YouTube. No wonder this YouTube thing is hard.
There is actually a 10 seconds delay from YouTube to our call on Discord, mate. Wow.
Right, I'm going to turn this up, but then I can't hear myself. I think that should maybe be it.
Hmm. Well, guys, if it doesn't work, well, everybody can watch the watch the stream from themselves and
Yeah, no, it's not on OBS, so there's a full audio capture there. It's like I need to add on display capture. I mean, what am I adding in here? Scene, window capture. No.
no. Uh, audio output capture, it should be the same as my voice, but it's and then you have to select the audio device from where you
Yeah.
yourself are hearing it, and
Mm-hmm.
then it should work. There's no reason why it shouldn't.
Right. Okay. With you.
Should is a big word, you know. Actually, 22 on ZB, it's holding. It's holding. But I don't have the balls anymore to try and
No,
get along. No, no, no.
no, definitely not.
Not with Powell speaking in less than 4 minutes, 5 minutes.
Right, so it seems like it's coming through my mic, but not through audio capture, which is weird. Let me see if this works. Look at all these things, it's literally the same thing. Unbelievable.
Are easy, credit conditions have eased, sentiment has improved.
Let me see if that's it.
So I do think this economy has
There we go, mate. I think that's it.
momentum behind it, and I think can give you strong growth outcomes.
That's it now. Awesome.
Actually, their potential growth estimate remained at 1.8%.
Yeah, exactly. You should choose the same one you have for headphones.
Yeah, it's just a shame, mate. I've got 50 of them.
Potential growth rate in their forecast. Didn't happen
We will
today,
fix
but
them
that's in the
tomorrow.
coming quarters.
Matt, what would you want to ask Jay Powell?
It works. You got it.
Yeah.
Fantastic. Good job, mate.
Nice.
Mission accomplished.
Yes, exactly.
Yeah, so I think, I was going to ask about kind of the level of restriction.
You'd think I was like 60 here.
But I think it's more about understanding how they're thinking about a few things in the labor market. Bob mentioned, some weakness in the labor market. I'd be interested in whether or not the rise in the unemployment today.
I need some tech support. Exactly. You're telling me.
Payroll gains are stronger. The quits rate is
The irony that I actually run a tech company as well, it's astonishing.
Job openings have picked up, but are they
It's not a good marketing for your tech company, man.
inflation? We did have this big downdraft in the lowest point. That was going to be a very slow progress on this front. How are they just thinking about it over the next several months?
Oh, well.
I think it's an important question for them as well.
Okay, let me turn it up a little bit.
And it's the words the chairman used in the last news conference. We don't assume, we don't speculate.
Right.
That inflation forecast, Matt, are we sitting here and really saying that much has changed in 2 months that warrants the upgrade to that inflation
There's the bid back
forecast
up
of the
now.
FOMC without guessing, speculating or assuming on what policy is going to do?
Well, 22 gave another chance again. No balls.
2.6%.
Easy ticks, but
yeah, no
fine.
balls.
From tariffs. So, they'd be a little bit more hawkish on the inflation front.
I'm glad that I got that, we'll say, kind of lucky pullback long for 4 ticks. It fixed my day. I'm done for the day. Not touching anything else. It was a weird day.
Yeah, I actually ended up flat on the session, but happy to be flat considering possibly one of the worst performance days
It'd be even higher than that with
I
tariffs.
think I've had in like 4 to 6
and
weeks or
therefore
something.
they'd probably be taking out even a little bit more of those
So
rate cuts that they
happy.
were anticipating, which was already leaning in a hawkish direction.
No
Yeah,
doubt
me
you'll hear
too.
lots of
In the
questions
morning
about that
I
3 minutes' time when this
started,
news
I
conference starts. Matt, we'll let you run.
I
Matt,
wasted
say,
a bit
the
of
Fed
money on the
Neil
bond,
Data writes
then I
into
had
about a few times
lunch,
already this
relaxed,
afternoon.
and
The Fed is
I
prejudging
literally
policy.
didn't
That's one
have
view.
any
That's Neil's
loss,
view.
any
Yeah,
loss
you're talking
in
about
the
the
afternoon
fact that there
session. I
has been such a
recovered
huge
back to
shift
zero. I never
without some
traded good
sort of
as this
massive
on the
change in the
ZB.
tone of the data.
Not a single
There are
loss on the
people who
ZB and not
disagree
even
with, and
a
there are some people who
scratch.
say the data has come in a lot hotter.
So-
Nonetheless, they have a lot of things to explain.
But yeah,
in this
but I
press
traded like a
conference.
potato in
Are
the morning,
speculating?
so
Are they assuming? Are they guessing? At the FOMC?
that
You
is
know
it.
what? Their inflation forecast just
Okay,
struck
so
me
this is
as
normally what you'd
frustration.
expect. The market goes
Frustration with
bananas, then we have a
with
bit of
the
bounce back, and
stickiness
then
of
Powell speaks in
inflation.
2 minutes,
It should
and
be
then
1.9 to 2%
you
by
know,
now.
this is
Look
the
at
main
how the
event.
labor
Everyone needs to get the
market has
popcorn
loosened
ready,
up.
get some
Look at how great
Doritos,
this
get
laid
some
down.
dip,
And here
you
we
know,
are, still
chill
around
out.
2.25 to 2.6%. I don't read anything into it more than that.
So basically, do you think that at this point, this is a Federal Reserve that basically really is just throwing darts at a dartboard?
Also, completely
I
unrelated
think
point,
they have to be,
but I
because
was
they
listening
don't.
to
Essentially
a
what he's
podcast
saying.
earlier,
They don't know
and
what
a guy
public-
that is
By the
basically
way,
now
back in
a
2009,
massive buyer of
they would
BTC, a
have
big
forecast
fund,
2.25 to 2.5, because remember they had the
is
flexible average
using
inflation target.
Coinbase to
They
basically buy their
wanted higher
BTC,
inflation for a period of time,
and they're
and that's what
executing off
existed in 95
of a
during the
TWAP
last soft landing. Now, they
algo.
don't
Oh.
speculate, but they model, and they've
Which I thought was quite
modeled
interesting.
everything. Yeah, well,
I brought this
it's a
up
fancy
And they're
Very
using
interesting.
Coinbase. It's a US company. They're now basically seeing that more as a reserve and a better store of assets than gold.
I don't buy it. They got to be ex post. They got to wait for GDP to crack, for unemployment to get to 5%.
Right now they have
Yeah,
to
Max,
cover a
Bund
vote,
was
don't
very
they?
difficult this
Exactly.
morning.
They're just an
I don't know
ex-post
for what
machine
reason.
called
Bob Michael, this was fun.
I've
It's
cut
good
a
to
lot
see
of
us,
trades
almost
that
there,
eventually
almost
then
the holidays.
turned
After this is
into
like kind of
would
it.
have
For
turned
many of you I
into
know,
positives
guaranteed
or
remain
at
for
least
us
scratches, but
included.
yeah,
Physically, I've said we'll be here, but sort of
5 ticks,
psychologically
5
we'll be
ticks, 5
somewhere else.
ticks, you're down
Exactly.
150
Do you want me
euros
to
to start the
still come
day,
in
and
tomorrow?
You're going to be
Yeah,
here.
are you going to be here or are you
TK's going to be somewhat
here?
checked out.
You're
Just
actually going to
from my own
But it's okay,
knowledge,
it's not
see
here
if
physically either, right?
YouTube
You're
then
done.
I didn't
says
take a
you were
vacation
using someone
day
else's stream
until the
or
road
like
stops
whatever
are
and does the whole
eliminated.
copyright
By
thing.
tradition.
Does that mean
So
that
that
I
got me
just
to May 10th.
don't
Nice.
And so thank
monetize
you.
the video or
So,
something?
you
I
know,
mean,
I'm
not that it
taking a
makes
couple
anything
days off. I'll
anyway.
be
It's
here
just,
next week to pick up the pieces.
Well, the
you know,
chairman's
what's
here
the correct
right now, so
procedure?
we should probably
Does
cross
anyone
over
know in
down
the
to
chat
Washington,
about that?
DC, and catch up with the chairman of the Federal Reserve, Jay Powell, after reducing interest rates by 25 basis points.
I think as long as you don't monetize it, it doesn't really matter,
Good
right?
afternoon. My colleagues and I remain
I think so,
squarely
yeah.
focused on achieving our dual mandate goals of maximum employment and stable prices
If
for
it's
the benefit of the American people.
because it needs to
The
be
economy is
really
strong overall and has made
copyright
significant
protected, like
progress toward
music
our
content or
goals
stuff
over
like
the
that,
past 2
TV
years.
shows.
The
But the
labor market has
FOMC
cooled
is
from
not
its
copyright
formerly
protected
overheated
overall.
state and remains
It's a
solid.
public release, so
Inflation has moved
there
much
shouldn't be any
closer to
problem.
our
But
2%
if you
longer run
put
goal.
copyrighted music or any
We're
other
committed to
content, then
maintaining our
the
economy's
audio will
strength
be
by
muted,
supporting
or the
maximum
video will be
employment
muted,
and
or
returning
the video
inflation to our
simply
2% goal. To that end, today, the Federal Open Market Committee decided to
Powell
take
is
another
lucky.
step in reducing the degree of policy restraint by lowering our
economy
policy
is strong,
interest rate by
labor
a quarter
market is
percentage point.
solid.
Right, let's just...
We also decided
see
to
what
continue to
is-
reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.8% in the third quarter, about the same pace as in the second quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of about 2% over the next few years. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 173,000 per month over the past 3 months. The unemployment rate is higher than it was a year ago, but at 4.2% in November, it has remained low. Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market are now less tight than in 2019. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.2% at the end of this year and 4.3% over the next few years. Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.5% over the 12 months ending in November, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.4% this year and 2.5% next year, somewhat higher than projected in
There's
September.
nothing happening at all at the moment.
Thereafter, the median projection falls to our 2% objective. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate.
Positive delta, but
At today's meeting, the
Spread
committee
again in
decided
play
to
here.
lower the target range for the federal funds rate by a quarter percentage point to 4.25% to
Buying of
4.5%.
the short and
We've
the
been moving
long
policy
end.
toward a more neutral setting in order to maintain the strength of the economy and the labor market,
No, selling
while
the price
establishing
as well.
further progress, enabling further progress on inflation. With today's action, we have lowered our policy rate by a full percentage point from its peak, and our policy stance is now significantly less restrictive. We can therefore be more cautious as we consider further adjustments to our policy rate. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course.
Some spread going on here, mate.
In our summary of economic projections, FOMC participants wrote down their individual assessments of an appropriate path for the federal
The correlations
funds
are completely out of
based on
whack right
what
now.
each
They're basically
participant
steepening.
judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of next year and 3.4% at the end of 2026. These median projections are somewhat higher than in September, consistent with the firmer inflation projection. These projections, however, are not a committee plan or decision.
Wow. This is actually quite a good spot
the
to
economy
potentially
evolves,
stab
monetary policy will
the
adjust
30-year,
in order to
but
best promote our
the
maximum
fact that the
employment
spread
and
is
price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can ease policy more quickly. Policy is well positioned to deal with the risks and uncertainties that we face.
If you guys want to ask any
in pursuing
questions,
both sides of our dual mandate.
you know, we can get to them,
On a technical
you know,
note, we
when
lowered
this,
the offering rate on our
when he's done
overnight
speaking.
reverse repo facility to align it with the bottom of the target range for the federal funds rate, its typical configuration. Technical adjustments of this kind have no bearing on the stance of monetary policy. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Big investor is asking, why do condoms come in fruity flavors?
Gina Smilek with the New York Times. Thank you for taking our questions.
It's actually a very good
I wonder
question.
if you could talk a little bit about why officials think it's appropriate to cut rates at all in 2025 if inflation is expected to remain firm throughout the year. And what would you expect at this point the timing might look like? Would a January cut potentially be possible, or does a pause next month seem more likely?
Well, so let me start by saying why we cut today and then move to 2025. So I would say today was a closer
Look
call.
at that, just
But
absolutely
we decided
dust.
it was the right call because we thought it was the best decision to foster
All dreams of
achievement of both of our goals, maximum
a
employment
wider
and price
pullback
stability. We see
into
the
last
risk
week
as
weakness
two-sided, moving too slowly
gone.
and needlessly
Yeah.
undermine
All
economic activity in the labor market, or
dreams
move too quickly
dust.
and needlessly undermine
There will be
progress on
someone that
inflation.
sadly
So we're trying to steer
is
between those
holding
two risks.
multiple longs
On
right now
balance, we
and
decided to
praying
go ahead with a further cut, and I'll give you some details on why.
on this.
Downside risks to the labor market do appear to have diminished,
Hopefully
but the labor market
there's
is
no
now
one here.
looser than pre-pandemic, and it's clearly still cooling further, so far in a gradual and orderly way. We don't think we need further cooling in the labor market to get inflation down to 2%. Job creation is now well below the level, or certainly below the level. that
Yash,
hold
the channel, if you go to
unemployment
playlists, mate,
constant.
there's
The job
a
finding rate is low and declining,
everything is covered on
and
the
other measures
on the
such as surveys
playlist
of workers and businesses,
there, mate.
quits, things
It
like
gets
that,
gets your feet wet
broadly show
into
a
order
much
flow trading
cooler
and
labor
reading some
market
fundamentals.
than we had in 2019. It's still quite gradually cooling. So we keep an eye on that. Inflation, we see that story as still broadly on track, and I'll tell you why. We've made a great deal of progress. 12-month core inflation, as I mentioned, through November is estimated at 2.8%, down from a high of 5.6%. 12-month inflation has actually been moving sideways as we are lapping the very low readings of late last year. Housing services inflation actually is steadily coming down now, albeit at a slower pace than we might like, but it has now come down substantially, and it is
believe it or not, I was
slower than
net
hoped.
short at one
And
point
we've
today,
had recent high, readings from non-market services and some
5
bumpiness
10-year
for bits. So,
contracts
I'll
from
just say
pretty much the high of the day.
So remember that we couple
If
this
only
decision today with the
you'd have held
extended
down,
timing
it's been an
language of the
absolute
post-meeting
melt.
statement that signals that we are at or near a
Wow.
point at which it will be appropriate to slow the pace of further adjustments. You ask about 2025. I think that the slower pace of cuts for next year
Yeah.
really reflects.
I mean, now we're just in absolute no man's
both the higher
land. You know what I
inflation
mean?
readings
There's
we've had this
nothing.
year, and the expectation that inflation will be
There's a
higher.
low
You saw in the
somewhere
S&P
from the
that risks
15th of
and uncertainty
November, but
around inflation
I don't
we see as
believe in,
higher. Nonetheless, we
No.
essentially see ourselves
correlations.
as still on track
Say
to continue to
telling
cut.
me
I
that
think
there
the
is
actual
still a
cuts
buy
that
and
we
there
make
is
next year will not be.
Do you know, it's a bit of a
because
nightmare
we wrote
actually,
down
the
today.
fact
We're
that
going to react to data. That's just a general sense of what the committee thinks
just
is
everything's now
likely
out
to
of
be
whack.
appropriate.
Do you know what I mean?
Sorry, just one quick follow-up.
Yeah.
Why, I guess, would you make those cuts? Like, what would be the trigger to cut?
So we're to cut further after this point.
Whoa, get that away
I
from
would
there.
say it this way: we've reduced our policy rate now by 100 basis points. We're significantly closer to neutral. At 4.3% and change, we believe policy is still meaningfully restrictive. But as for additional cuts, we're going to be looking for further progress on inflation, as well as continued strength in the labor market. And as long as the economy and the labor market are solid, we can be
He's saying the
cautious
same thing
about
that they've been saying
as
for
we consider
14
further
months.
cuts.
We need
And
to
all
be
of that is
cautious.
reflected to
Yep.
the question in the December SEP, which shows a median forecast
And the market
of
is
down 2
calling
cuts
bullshit
next year
on it.
compared to 4 in September.
Howard Schneider with Reuters, and thanks for the opportunity to ask you a question.
I'm actually quite surprised they even cut at all, mate, to be honest.
2016, during the last transition to a Trump administration, where the committee
Like they had to,
tighter
the market already
policy,
priced
in
down,
part
but you know, it's
in expected anticipation of the fiscal policy stance that was
with Trump
seen
and the
evolving
data
over
so
the
strong,
year.
you
Some
know.
of it was a data mark-to-market exercise, and some of it was anticipation of fiscal. What's the split on this one? How much of this was accounting for inflation data that was coming in, and how much of it is expecting that there will be inflationary fiscal policy
Max,
next year?
did you already set up your
I'd
HQ
say
account?
I pointed 5 or 6 things,
but I didn't
and
deposit it.
let me start by saying that we think the economy is in a
Waiting for
really
the,
good place, and we think
easy.
policy is in a really good place. Let's
And
remember that the economy is
commissions
growing
and margins are
2.5% this year, that inflation has come down by
Basically,
50% from 5.6% to 2.6%. Headline inflation is 2.5% on a 12-month basis. We're actually in a really good starting place here. But since, so what's really driving the slower rate cut path? First thing is growth is stronger, right? The economy grew faster in the second half of 2024 so far than we had expected.
There was no
and
progress
is
in
expected to be
inflation.
above what our expectations in September next year as well. Unemployment is lower, and in the SEP you'll see that participants think that the downside risks are less and uncertainty is less. So that's more strength, right? Inflation is higher, as we talked about. Inflation's higher this year. It's also higher in the forecast next year. I'd also point out that we're closer to the neutral rate, which is another reason to be
the thing
cautious
is,
about
Peg, it's,
further moves. And
I don't think they should be
but
cutting at
then
all. The
getting
data's
to
far
your
too
point,
strong, and Trump's
there's
about to come
also,
in and
there's uncertainty.
always
around
raise,
inflation, I pointed
you know,
out, is actually higher.
inflation to the moon.
It's also in the case of some people, the way I would say it is this.
There is absolutely
some
no
people did,
buying in
take a very
the long
preliminary
end.
step
None.
and start to incorporate highly
What
conditional
you don't
estimates
know that.
of economic effects of policies into their forecast
But
at this
I see
meeting,
some
and said so in the meeting. Some
10
people
lots,
said they didn't do
leaks,
so,
1,
and some people
3.
didn't say whether they did or not.
Oh,
So we have
actually,
people
at
making a
13,
bunch of different approaches
236
to that.
by,
But some did identify
guys.
policy uncertainty as one of the reasons for their
somebody is clipping 10,
they're writing down
10
more
lots here,
uncertainty around
12,
inflation.
13.
And
again,
the point about
then we buy
uncertainty is
10,
it's kind of
10
common
another time.
sense thinking that when the path is uncertain, you go a
It's
little
like
bit
hard.
slower. It's not unlike driving on a foggy night
Exactly.
or walking into a dark room full of furniture. You just slow down, and so that may have affected some of the people. But as I said, there's a range of approaches on the committee.
If I could follow up on that, you mentioned the risk and uncertainty indexes toward the back of the document. The upside risk to inflation jumped quite substantially. The only thing really that's happened, you mentioned that the disinflationary story remains intact, yet the risk weighting has jumped to the upside. The only real thing that's happened is November 5th in the meantime. Is it fair to say that that's what's driving the higher sense of upside risk on inflation?
Actually, that's not the only thing that's happened. What's happened is that our forecasts for inflation for this year, I think, are 0.5 higher than they were in September. So you had 2 months of higher inflation, September and October. As I mentioned, November is back on track, but once again, we've
No, it doesn't care, does it?
projection for
Right, we're now at
inflation,
12s.
and it's kind of
This has been
fallen
an
apart as we approach
absolute
the end of the year. So,
bloodbath in the long end of the
that is
curve, man.
certainly a large factor in people's thinking. I can tell you that might be the single biggest factor is inflation has once again underperformed relative to expectations. It's still, going to be between 2.5 and 3. It's way below where it was, but we really want to see progress on inflation.
A meme coin called
as I mentioned,
coin.
as we think about further cuts, we're going to be looking for progress on inflation. We have been moving sideways on 12-month
It made like
inflation.
a 1000% return.
That's in part because
What is it? What does it do?
measured
Is it any utility at all? Is it just a complete meme coin? Or?
We're going to want to be seeing
Complete
further
meme
progress
coin.
on bringing
Zero
inflation
utility at all.
and keeping a solid labor market.
I think so. Daily.
Thank you, Chris
Oh, I didn't mean that.
Rugaber at Associated Press. Thanks for taking the question.
It was launched
In September
right
2018, the Fed staff
before
in
the
the Teal book
elections
discussed a policy of looking
on
through any new
22nd
tariffs as
October,
long as there were
and
one-time
since then
increases and inflation expectations remained anchored.
has
Could you comment
risen
on if that analysis remains
4,600, 700%
tariffs generally? that you
from
can share?
0.01
So I do think
to
that the
0.92.
The September 2018 Teal book alternative simulations are a good
Sometimes
place to
I see
start.
these
have
things
Joe
and I
Brock
say,
here with me today.
I would love to
I'm sure
be
you have them too.
a buyer of
They're
the
a good
fart
starting
coin.
point. And I would just say, it's 6 years old analysis, but nonetheless, this is still, I think,
Yeah, I mean,
the
realistically,
questions
who's
to
putting the
ask.
money into that, right? It's only insiders, and then if you do actually put your money into it, you're normally the one that's providing liquidity for people to get out.
There's some language in the see-through
Okay, can we
tariff
see a
that
bounce
says,
here on? I mean, surely it's not been more than 3 ticks. Here we go. Let's see if we can get a bit of a bounce here on the long end. A bit of a bounce on the wow.
Don't call bottoms, man.
Did you see the 2 and the 5 year? Oh my gosh.
You said bounce and smash.
Understanding again the ways in which tariff-driven inflation can affect
the yields on the
tariffs can affect
2-year notes
inflation in the
are up
economy and
88
how to
basis
think
points
about that.
and
So
wow,
we've done
100
a
basis
bit of- a
points
good bit of work
on
all
the
of that, each
5
of
year.
us has.
Completely wrecked.
And it puts us in position.
This
when
is
we finally
crazy,
do
man. It's
see
just
what
look
what
at
the
this
actual
this
policies
2 and
are
5 year.
to make a more careful, thoughtful assessment of what might be the appropriate policy response.
See the amount of money that these big boys are making who actually have got teams on this. Do you know what I mean? To already have all this data completely, drawn in.
Yeah, prepared and everything.
Yeah, exactly.
We should do something like this,
Yeah, we definitely should. I mean, the likes of AI, surely to goodness you can just sling it tons of data and gives you a probability percentage back or something. Do you know what I mean? Because realistically, man, that's where the money's at. Never mind scalping for a few ticks. If you could get an 80% probability factor, this kind of move happens. But to be fair though, mate, this is a red herring. Treasuries never do this.
So it's very premature to try to make any kind of conclusion. We don't know
Something in the style like, do you remember the Axia Futures plan for the elections? No, I played that. I played that day plan, and it was perfect. It would be very, very interesting
I wouldn't say that we know
to be more prepared.
The last episode is or is not a good
wow, that minus 1,000, minus 1700 delta on the SVB at the bottom.
There was also quite
there is negative 20,000 delta in the last hour on the 2 year.
Have effects. I don't know. I just think we need to take our time.
There's just no buying.
And make a very careful assessment, but only when we've actually seen what the policies are and how they're implemented. And you know, we're just not at that stage. We're at the stage of doing what other forecasters are doing.
I suppose you could
just
pick,
thinking
but
about these questions, but not trying to get to.
You know, that's
for some time.
Unless you get clean flows, you just get ruined.
Nick Timmeros of the Wall Street Journal. Chair Powell, to make sure I understand, participants today revised up their core PCE
better ways to do it.
for 25, so that the central tendency runs from 2.5% to 2.7%.
You just have, if you do some sort of analysis of there is a huge iceberg here at 11 on the ZB. Wow, 2,000 contracts traded into.
What would compel the committee to be cutting?
Interesting if they smash right through it. You don't normally see that very often on treasuries. You know, icebergs, big ones normally hold, like they tick up off it.
He has bookmark shows he has another 2,300 contracts left there.
We have inflation coming down. Core inflation coming down to 2.5 next
year.
What
he does.
That'd be significant
price or.
You see a slower path. I think that does take on
some
board
brave
that
men.
we want to see real progress, but we're seeing meaningful progress to get.
Actually, bookmap is good at detecting the icebergs that are the official CME flagged icebergs.
Better than this year.
Oh, really? So they actually tell you that.
That would be meaningful. We also have to think
like
about
a block order. This is how long it's got left. Sorry, the size is left.
Exactly.
Wow.
Also mindful that
there is someone that has a huge clip and uses the standard functionality offered by the CME to place iceberg because they have one. Look at that!
I know, wow. He's literally just called the bottom. Maniac.
Yeah.
It's probably the same guy who just bought it up, right?
Right. I'm sending a screenshot on our thread.
Send that if you could. I mean, every single bid is just smashed, and it's not even. It's smashed with a sweep as well.
Let me explain extent and timing. So, the sense of that word.
He's moving up with price now 12. He's holding 12 now.
Anticipated. We're at a point at which it would be appropriate.
He's moving up tick by tick from 10, 11, now 12.
Oh, really?
2,400 contracts left.
It's getting to a neutral stance. Clearly, that distance.
And they trade into him, but not so much anymore.
So that's the extent
holding,
question.
He's holding.
And
if he
we're
pays,
looking
this
for
is
further progress on inflation as well as a strong labor market. But
if he what? Sorry, if he pulls.
Just and that we're at a place where we assuming the economy.
It's weird that he's chasing price though. He's definitely wanting to fill, and it's ticking up the rest of the market as well.
Slow the pace of adjustment. So
buying
that's what we
100
mean
now.
by that. We're not trying to make decisions
I'm
about
buying
the longer run.
100 per clip.
We're trying to make sensible policy as we go.
Still there.
And I just would emphasize the uncertainty, which is it's just a function of the fact that we expect significant policy changes. There's nothing really unusual about that. I think we need to see what they are and see what the effects.
Yeah, I probably should have done that for the stream. We're watching here.
When
these prices here. I need to be careful in case I don't click.
Look how he refreshes. We are now 400 on the bid. Next trade 500.
Even though you
500.
cut rates by 100 basis points
Holding.
this year, we
Yeah.
haven't seen much change in mortgages, auto loan rates, or credit card rates.
He pulled.
Is he back? Do you get that instantly if he pops up again? Look at the 5 year is just drilling into the lows.
More at risk of a slowdown than you anticipate.
He was faking it.
The rates that you talked about are really longer run rates, and they are affected to some extent by Fed policy, but they're also affected by many other things. And longer rates have actually gone up quite a bit since September, as you well know, and those are the things that drive, for example, mortgage rates more than short-term rates do. So we look at that, but we look at all
There's
the
nothing
financial
much to
conditions, and then we
say
look at
after
what's
this
happening in the economy. So what we
FOMC
see happening in the
decision and
economy,
statement
again,
and conference, other than be surprised at how much more this thing can fall.
For a very long time, and it keeps not happening.
This is just complete. This is just complete free fall. It's just never ending.
Yeah, we just can watch it free fall and think, oh wow, look at that.
We're right about at the same level. So the U.S. economy is just performing very, very well, substantially better than our global peer group. And there's
Yeah,
no
I mean,
reason
this
to think
is-
that a downturn is any more likely than it usually is. So the outlook is pretty bright.
Well,
for
what's good
we have
is
to stay on
tomorrow
task,
and Friday
continue to have restrictive policies
should
so that we can
normally
get
be
inflation
pretty
down to
balanced
2%.
days, because when
We're
the
also gonna
market
be
does
looking over the
this,
labor market. We want to keep the
you know, it
labor
normally
market pretty close to
normally
where it
takes a
is.
breather the next
We're
day.
pretty close to estimates of the natural rate of unemployment. Job creation is a little below the level that would keep
This
it
is
there,
the
but
10-year.
nonetheless close.
Wow.
And so that's what our policy is trying to achieve.
If I could follow up by asking about your formulation for beginning rate cuts, included the phrase we need to have confidence
12, there were
that inflation is moving down
the previous
towards our
IBEC
target.
at
Given the
a
fact that
certain
you've
point.
raised
Look at this,
there
they're
was
just
a-
drilling
next
into
year,
the offer there in the
do you have
tens.
confidence,
See if it
or are you
holds, or is it just going to pull
uncertain
again?
about the path of inflation?
Someone has stood up
So
here, they've
confidence was our test for
absorbed this
labor market
2K.
markets, and you know,
He's back at 0.8.
Look at the
He is?
broader
Okay.
scope. We've made just a great deal of progress.
Let's see if they
you know,
defend
we're
this.
well
So they're
into the
currently
twos
defending this on the
in,
tens.
in
Maybe
inflation and round
fives.
for
Up,
even lower than that. We
like
have been
before.
for headline inflation. So I would say I'm confident that.
Okay, so he's done speaking in 5 minutes. Normally,
in the story about
when he's done speaking, you typically get a reversal. Or I remember that, so it works in ES a lot.
Housing services inflation, which is one that we really worried about. It really has come down
So
now
we'll see.
quite steadily.
Well,
At a slower pace
yes,
than
it's
we
down
thought,
70
2 years
points.
ago, but it's
Wow.
steadily coming
80,
down
80, sorry.
as market rents.
Prop
you know,
prop
as
firms are
market
having an
rents
absolute field day
start to
today.
equilibrate better.
No wonder they
with,
do FOMC 50% off sales.
not new tenants, but new leases. Market rents is new leases. So
You know what I mean?
that's happening. That process is ongoing
It's the
pretty
best
much
marketing
as we expect.
strategy ever.
Goods inflation, which is another big piece of it, has
Fantastic,
returned right to the
fantastic.
range where
Oh,
it was
we
before
have
the
some more
pandemic.
people in the
Just
stream.
for
You-
some
you've
months
done
this year,
with
it
your-
kind of moved up in a bumpy way because
Yeah,
of
there's
fees,
Gary
cars,
Boy.
and
Gary's
things.
absolutely wild in
Overall,
treasuries.
that should
It's I
generally be in
mean,
the range it was in. That leaves
just
non-housing
free fall
services
in treasuries, seeing as the Fed have basically come out and said we're only looking to cut twice, and potentially that could be we won't cut at all.
Those are services that are imputed rather than measured directly, and they don't. We think they don't really tell us
Wow.
much about the about tightness in the economy. They don't really reflect that. I mean, a good example is financial services, which is really done off of asset prices. And that's how that inflation works. So the overall picture, the story of why inflation should be coming down,
getting out of
is
shorts
still intact.
rather
In
than
particular, the labor market. Look at the labor market. It is
rather than
cooler
trying
by
to
so
buy,
many
right?
measures now. Modestly cooler than it was in 2019.
Might be a big
year when
seller
inflation was
from earlier.
well under 2%. So it's
Yeah,
not
exactly. There's going to have to be someone's going to have to work the bids, but
regional and particular professions where labor is tight. But overall, you're not getting inflationary impulses of any significance from the labor market. So what's the story? The story is
3 minutes, and then we'll potentially see a pullback.
these large shocks that the economy got in 2021 and 22 in, for example, housing services, and now also in insurance.
We
in
have also
particular,
we could also say that
costs went up, and those are now being
the
reflected
delta could unwind
later in housing
into the
insurance.
close.
It's real inflation,
Yeah.
but it doesn't portend
2 minutes till bond close
persistent
as well.
inflation. So we and most
bigger
other
buying
forecasters
clips coming in,
still feel
100,
that we're on
150,
track.
80.
43,000 delta in an hour in the 10-year. Wow.
But I'm confident that that's the path we're on, and our policy will do everything.
There's
it can to
actually just
ensure
not
that
there's
is
not
the
been any
case.
defense in the bids in the long end. It's not that negative.
Zero.
Thank you, Colby Smith with the Financial
Big
Times.
interrupt,
So the unemployment rate as of November, while still very low, is within spitting distance of the level that
Infinitely.
generated a lot of concern about the labor market over the summer.
This is
On the lead up
this
to
this
the
is
50 basis
certainly
point cut in
ending the year with a
September.
bang, isn't
Hiring
it?
has also narrowed to just a handful of sectors.
Yeah.
But now the committee appears comfortable skipping cuts at upcoming meetings. So what has changed about the
10-year
committee's
yield is
assessment
actually
of the risks confronting the labor
breaking,
market? Is there just less concern now
what
on
date
that
is it?
front? Or
Wow.
is it just about there being more upside risk to inflation that now needs to be accounted for?
The unemployment rate is now the same as
It's
it was
just-
in July, 4.2%. It's moved up and down, but it's now the same.
I mean,
as
look at
July.
this 10-year.
And job creation is lower than it has been, but it's
20,000
been-
delta
it's
just
been
come in there
steady.
in a
It's not
minute.
declining. It's in steady at a
Negative.
level which as I pointed out a couple of times, is actually below the level that would hold the unemployment rate constant, but it's not so far
Unwind.
below.
Yeah,
So you might
You've got to close out some, right? Or is it just going to continue? Let me read.
If job creation continues at that level in the establishment survey, then you would get a tenth maybe every other month kind of thing. So
wow.
gradually,
Okay, here we go.
We don't have that kind of precision in this. So you're right, though, and I read out some of the reasons. We do think the labor market is still cooling by many measures, and we're watching that closely. It's not cooling in a quick or in a way that really raises concerns. I think
this is the most volatility I've seen in treasuries in
participants in the FOMC
months
really
and months
the
and
risks
months.
and uncertainty had improved relative to the labor
Probably
market.
the last time was the election days.
Things have just gotten a little bit better. It doesn't, the unemployment rate flat and things like that. Nonetheless, we're watching it closely.
It still wasn't like this though, right?
The idea though is that no additional kind of
it's a little bit more two-way.
is welcome here. What's to prevent that from happening if rates are?
I just remember Rob shorting like 15 lots on the ZB and the 10-year.
Further softening to get to 2%
Did he?
inflation. That's what I'm saying.
That's
not that it's not welcome.
madness.
We don't need it. We don't think. If you had a situation where inflation's moving around by a tenth every few months, that's we'd have to weigh that against the fact that inflation has.
I think having the no balls play has been good, mate. Because if you had balls earlier, it would have been a bloodbath.
For a while there, we were only really focused mainly focused on inflation. We've now gotten to a place
to call a bottom.
Where the
But you don't think, because it's like
and so that's how we think.
You give them a different idea to keep shorting something that has already fallen 20 ticks, then it falls 25, then 30, then 35, and you say no.
Exactly.
Phase is over,
and if you at all even attempt this trade, and you get, that's the problem with traders, is if they get at all stubborn in that move, they, it can end very, very badly.
But we may get around to that. But no, I would say we are in a new phase in the process, as I said. So, and that's just because we've reduced our policy rate by 100 basis points. We're significantly closer to neutral. We still think where we are is meaningfully restrictive. And I think from this point forward, it's appropriate to move cautiously and look for progress on inflation. We've done a lot to support economic activity by cutting 100 basis points.
I'm not even listening. I'm just reading the headlines.
I support the decision, and I think it was the right decision to make. I think from now, we are in a place where the risks really are in balance, and we need to see progress on inflation. And that's how we're thinking about it. So it is kind of a new thing. We move pretty quickly to get to here, and I think going forward, obviously, we're moving slower, which is consistent with
Polish zlotys.
With the SEP.
I wonder if I could follow up and ask you how much you or the committee are looking through.
I'm assuming anyone is watching, guys. You didn't trade any of this, right?
Eggs because of the avian flu, that kind of stuff, and then looking forward perhaps to housing inflation coming down as it did in the recent report.
So we always try to be careful about not throwing out the numbers we don't like. It's just a occupational hazard. Is to look. Oh, those high months are wrong. What about the low months? We have a very low month potential in November. It's estimated
what's the name for
by many to be in the mid-teens.
For the retirement, when you retire and you get the money from the
pension,
government,
not just a couple or 3 months. We shouldn't.
It's the same as Italian.
Our position.
If he's getting the pension from the Poland, because we are Polish, he works in Poland a lot,
coming down gradually
and he's happy when the euro is weak, because it's weak against the zloty as well.
That's way better than we were.
And so when he converts, because he gets zloty, then he has to convert. He waits when the euro is weak, so probably tomorrow he will convert.
Nice one. You gonna let him know?
Yeah, I thought it.
Neil Irwin from Axios. Financial markets have been very buoyant really all year. Is the committee comfortable with where financial conditions are, or do you see a risk that looseness in financial conditions could undermine progress on your inflation target?
Daniel and Sim, nice one, mates.
Financial conditions, of course,
Brian traded early, but not the news. Yeah.
The performance of our
we're seeing a bit of a pullback.
Affecting the economy. So what we've seen over
I'm not too sure how I feel about it. I kind of feel that it is.
We've seen inflation, well, over the last couple of years, come down
a bit. I mean, a bit of an overreaction, or
off quite a bit. That suggests that our policy is restrictive. We can also look more directly at the parts of the
moving away
economy
from
that
the
are
low
affected
equities.
by
Equities are
that are
melting.
interest-sensitive,
Yes,
particularly
down
housing.
100 points.
Housing activity
Wow.
is very low. And
Dying.
that's partly significantly because
I mean,
of our
I was
policy. So we think
kind
our
of
policy is working, it's
reading
transmitting,
and
it's having the
thinking
effects
that
on our goal variables that we would want. You know, a lot of things move financial conditions around, as you know.
Yes, just.
And we don't really control those. But I'd say we see the effects we're hoping to see.
you're not glad to not be trading that anymore, mate?
The places where we'd expect to see it.
Absolutely.
So if I may, speaking of assets that have
See, that's the hard thing about
the U.S. government building a reserve of
equities. I find it's just not honest with news.
You know, you
know what I mean?
We're not allowed to own Bitcoin.
You never know what way ES is going to take it, to be honest.
That's the kind of thing for Congress to consider, but we are not looking for a law change at the
There,
Fed.
there were just talks and anticipations of. Well, Nvidia has been melting for a week or something like that.
It was up like 4% today. But maybe that was just some profit taking before. Then if you're saying it's been melting.
Yeah, it started telling. Like it didn't participate. Nvidia didn't participate at all in any of these new highs on the ES in the past.
Solid, it really has.
Month or so,
PDFP,
basically.
private domestic final purchases, which is
After
which we
the
think
earnings,
is the best
they
indicator
just
of private
started
demand is looking to come in
to
around
go
3%
down.
this year. This is a really good
The
number.
index cannot go anywhere.
Again, the U.S.
without
economy
Nvidia.
has just been remarkable.
Right.
And
Yeah.
when
There's Jacom. Why are there so many DOMs? Because this is the whole Treasury market. So
slow growth and continues struggle.
this is the 2-year, this is the 5, this is the 10, this is the Ultra 10s, this is the 30-year or the Treasury bond, and this is the Ultra bond. So these are extremely correlated to each other, and it represents the yield curve. So you know, I'm saying you need to have them all up, but you should definitely at least have up the 5, 10, and 30-year, in my opinion.
0.5% rather recently. The question, I guess, is do you
So that's why I made. They're not up for the goodness of my health or anything.
than the unemployment rate alone is signaling?
So like right now, the fact that the 5 and the 2-year is absolutely drilling into the lows, buying the belly or the long end is not ideal, but then it has bounced back off. But just the correlations are out of whack at the minute. There's continuous spreads in play.
Layoffs are very low, right? So people are not losing their jobs in large numbers,
Did
unusually large
he
numbers.
stop talking?
If you are looking for a job, though, the hiring rate is low,
I know.
and that's a signal of lower demand. It has come down. So we look for signs like that, and that's clearly
not
a
yet.
sign of
I know. Why is he?
softening. I didn't mention
Is he
it
not
earlier, but
like
I think
overstayed his welcome or something?
an ongoing gradual softening in the labor market. Again, not something we need to see to get 2% inflation, and you know that's part of the reason that explains why we moved ahead today with the action with an additional cut. So, but you take a step back, the level of unemployment is very low. Again, participation is high. Wages are
I won't
at a
tell you what
healthy
I did,
and ever more
what I mean.
sustainable level. Wage growth, and so the labor market. This is a good,
What's that?
a good labor market, and you know we want to keep
I
it that
bought
way.
05 into 07.
Oh, you did?
Yeah.
Wow, madman. I like it.
Thank you, Amara Mokwe from Bloomberg News. I just want to put a finer point on the labor market. Can you keep the labor market this way,
that's
in the
crazy.
strong position that you have described,
The
without
closing
further cuts?
close.
In other words, do you
I like
still
the
view the
closing
labor market
actions.
as needing support? To
Yeah, so do I. I like it when they're more predictable. This is too many sweeps, man.
We can't know that with any tremendous certainty. I will say that we think that our policy balances the risks. We think the risks are roughly in balance as between the two mandates.
I wanna
And
try to
we think the
say
labor
that we
market
get
is
in 12
in solid shape. And when I say it's soft,
Yeah, that's what I was thinking.
It's a very gradual process. You
Or
know,
we
job
stop
creations are meaningfully positive.
Don't wanna
Wages
say too
are,
much.
you know, if anything, still a bit
Probably
above
12.
what would
But
be
the 5-year
sustainable
need to
if
collaborate,
productivity were
really.
to revert to its
It's already at the bottom
trend.
again.
If you
I
take
mean,
a look
ES has got to pull back, right? Is it pulling back yet?
then wages are already at a sustainable level relative to 2% inflation.
I'm
So,
not touching this anymore.
Again,
Good.
I I don't want to overstate the downside of
from a
the labor
30
market because
ticks dump, I
the
got
downside clearly appear to have
6
diminished.
ticks, and they were both long.
Nonetheless, it's one of our mandate goals. And,
It's like a joke.
we pay close attention
Yeah.
to it, and it's worth noting that it is
The
still
market goes down
gradually
40
cooling,
ticks, and
gradually
I
in an
make 6
orderly
ticks
way.
on long.
And you know
Jesus.
that's how I would characterize it, and that's why we're
Yeah,
paying
when the
careful
easiest way is just to go short, exactly.
Thanks so much, Chair Powell. Elizabeth Schulze
Jacob,
from ABC
to be hon-
News. As you
how many
noted,
domes
the
you
Fed is
have
now
up there?
forecasting
1,
higher
2, 3,
inflation
4,
next year.
5,
High
6,
prices
7, 8.
are
8
still a
domes
burden
you've got,
for
right?
so many households right now.
Yeah, the one on the left is just their range between an 89 to 96% correlation with treasuries.
It breaks down into
So they're just other safe havens.
but
Swiss franc's not been that great this month, but the yen is super correlated to treasuries.
many people were saying that to get
Like
this far down,
96%
we would have had to have a,
stuff.
had a
I
deep
saw that.
recession
I've
and,
checked
high
a
unemployment
couple
right
of
now. Well, that
days
has
ago
not been
the
case.
correlation.
So, you know, the path
I mean, the
down has
Swiss
actually
franc
been much
to the
better
10-year wasn't
than
so
many
good.
predicted.
Yeah, it's broken down a little bit.
Managed to
I think
have
it's
the
like
unemployment
maybe
rate remain
80, 85 or something in the last couple of weeks.
longer run
Yeah, something
natural
like
rate,
that,
while inflation has come
'Cause
down.
I was actually thinking about changing that out
core
for
PCE inflation has come down from
ES, just to see how ES is doing and then compress it.
2.8% on a 12-month basis. So that's,
To be honest,
that's
I
a
might do
pretty
that.
good outcome. Why hasn't it come down? One reason
would
is
be
that,
a good idea to have the
just a
equities.
technical issue
Mhm.
around the way we calculate
But I
housing
would
services.
say
And that process has been slower.
some
than
say that
market
it
rents
is
are
wise
sh-
to
are showing
have
up
like
more slowly in that measure than we might have
one
thought
commodity, one energy,
So that's part
one
of it.
commodity,
I think there are other
the equity,
parts of the
and the
story,
bonds.
but, you know,
I mean, to
the-
have under the eyes,
what I
but
think people are feeling
my
right
little
now
brain cannot
is
process.
the effect of high
I already
prices,
have bonds and
not
equities,
high
and
inflation.
that's
So we
more
understand
than enough.
very well.
Yeah, I mean,
Prices
I
went
think
up
in
by a
general, I
great
kind of
deal,
get what you
and
mean.
people really feel it, and it's
Um,
prices of food and transportation.
I suppose I could actually, I could probably, you know, if I
there's
have
tremendous
ES,
pain
I have the
that
yen, and
burst of
then
inflation that was very global. This was everywhere.
I
in
don't
the
know,
advanced
oil.
economies at the same time. So now
You
we
know what
have,
is nice
inflation
if
itself is way down,
you
but
pay the
people are still
extra
feeling
cost
high prices,
for the
and that is
market
really what
data
people are feeling.
on
The best we can do for
Xenith,
them,
on
and that's who
Acon.
we work for,
You
is
could
to
you know
get
that
inflation
monitor
back
with
down
the
to its target
horizontal
and
bars
keep it there
for the yields,
so
no?
that people
Yeah.
are earning, you know,
You can
big,
have the same
real
for
wage
any
increases
instrument
so that
basically,
their wages
and
are
so
going up,
it's just a line.
their compensation is going up faster
Oh,
than
right, I
inflation
see.
year upon
Right.
year
The,
upon year,
the daily
and
range,
that's
it's
what
easy
will
to see if
restore
we are at the middle,
people's
at the
good
top,
feeling
at the
about
bottom,
economy.
what is
That's
the
what we'll
immediate
take, and that's what we're
reaction
aiming
without
for.
having
And as we look ahead
a
to
full
next year,
dome
what do you
or
see as the
a
biggest
chart or
challenge to
whatever.
the
Can I do that in a minute? So can I just have like the little boxes and just stack them along with like maybe the dollar index?
It's,
You know,
we're in a really
did I get
good
that
place. Our
data?
policies
I
are
need to
in
have
a
a
really
look.
good place. I expect another good year.
It costs extra. You have to get into the options and purchase real-time data for
Edward Lawrence from
for
Fox
the
Business.
futures.
So you say that we're
If you,
closer to
it's gonna be
neutral.
another
What
subscription.
percent
It's gonna be another
believe
subscription, yeah.
where is that neutral
And you
rate?
cannot use Rhythmic. You have to use their data, of course.
I would like to get the DOM for the dollar index, but that's kind of a nightmare to get, isn't it?
Right down in the summary of economic projections is the
On
longer
the ICE
run
futures,
neutral rate,
it's
which is the
quite
neutral rate
costly. I think
at a time
Brando
when
has the
supply
data
and
because he
demand are in balance, the
traded
full
it today
economy
on
is in
Sierra.
balance and no shocks are hitting the economy. That is
Yeah,
not where we are
you're
right now.
not
So
better just
when
getting
we're making
CQG for all of that, to be
monetary
honest.
policy, Fed, that's not the question
You
we're
can
asking. So you can't
add it
do a
all in.
straight
It's a pain in the
read
neck to
between
get
those
some of it
longer
through
run
Sierra, to be
numbers
honest.
that we write down and what we think the
They don't
appropriate
support
policy should be. So
like all data.
basically, at any given time, various shocks are hitting the economy, and so what we're doing in real time is we're looking at our policy stance and we're looking at the way it's hitting the economy, and particularly
yes,
we look
keeps
at the effects
dumping.
it's having
GG.
to try to move the economy
How's it
toward
going? Yeah.
maximum employment and price stability. And
I
the
think
answer
so.
can
The
be,
tariffs and the data
there
and the
are
lack
things
of
that
cuts
affect
as
the economy
well.
that are
Treasuries
lasting,
have
but not
absolutely
permanent. And
melted.
the ones that are permanent are the ones that would be in our
But it
star.
looks to be kind of all she wrote on treasuries. I
but-
can't
but
see as
nonetheless
challenging
go
the
away over
lows
time.
now. We'll probably just
They could
balance
actually
around
affect
here.
What's sort of technically the appropriate neutral stance in near term. So we're looking at that, and
I mean, the
we don't
pullback.
know
We've not
exactly
even
what it
had.
is, but as I like to say, we know it by its works.
Normally you get a
And I think
50%
what we
pullback,
know
but we're
for
so
sure is that
Oh, wow, look at this 10-year, mate.
There are many estimates of where that might be, and we
The
know we're a lot
ultra
closer to
10-year
it.
is
I
up
think we're in a good
2,
place, but I
4,
think from
6,
here,
8.
It's a new
and
phase, and we're
ticks
going to be
from the bottom. You'll be as
cautious
well.
about further cuts.
Actually,
But I think the market
Today's range on the 10,
I mean, I've heard estimates from 2.9%,
61.6.
You know, I think the markets would like to see a little more clarity about
It's about 2.5 times normal.
as to where that goalpost, for lack of a better term, is, because at the moment it looks big.
47 on the ZB, and then let's check the 5.
There are countless models of what a neutral
The
rate
5
might
year
be
is
at any given time.
nearly
There are
90
empirical
ticks.
models, there are theoretical models, there are
Wow.
things that combine them, and they have as many different answers as you'd like.
Next
there's
time
no real
you got to
certainty,
be
and
prepared for this kind of
it's
stuff,
actually a
but
good
I
thing
promise.
to know
But
that we don't
next
know
time
exactly where it is. So you're not tempted
I'm
to think,
gonna-
oh, I think this model or this estimate is.
I mean,
right. You just
I've
have
got
to
no
be
excuse,
open
mate.
to,
I even prepped and I still didn't. I was net
empirical data
short
that are coming in,
aggressively
also how it's
today, but
affecting the outlook. And
you
it's
just,
not
the
made
trouble
any
is,
easier
you
by
end
the
up
fact that, that our policy works with long and variable lags.
like it's.
Nonetheless, that is the job we have. And,
You can't go into
so
that with full
we're-
clip.
I think
You know what I mean?
It's appropriate for
You
us
need
now
to
proceed cautiously.
probably go
now that we're
25%
100 basis points
and give it more
closer
room, you know.
to neutral, and we'll do so. Meanwhile, the economy seems to be in good shape,
to
and these cuts will certainly help to
distribute,
support economic
correctly.
activity and the labor market, while we can still make progress on inflation because
overall,
policy is still
even if
meaningfully
you,
restrictive.
I mean, the 5 and the 2 years will move more,
Victoria
but
Reader
since
with
they're
I just
6
wanted to make
times
sure I
smaller
understood what you were saying at the beginning about
than the
inflation. Are you
30
saying
overall,
that
even if
progress
the
on
range
core
today
PCE counts as progress on inflation,
on
even if headline inflation ticks up?
on
And
the,
then
on
also,
the B on the 30
since
year
that's what's
was
projected in the
Yeah,
ACP,
I'm
I
with you.
was wondering
It's
what
kind of the
accounts
same,
that?
isn't it?
Why do
Per
you
contract.
see core PCE going
per
down
contract.
and
Probably are just
potentially,
on the 5 year you have
headline inflation ticking up?
you can if you're wrong you can save
as
yourself.
I imagine you know,
Maybe
the
I don't know
goal
if it's
overall
gonna just
is
go
headline
against you.
inflation, because that's what
But
people
I
experience.
don't
People
know.
don't experience core
Need to
inflation, they
explore. We
experience
need to take
inflation,
out
and that
Robert
includes
from
food
his
and
cave
energy costs.
and
So
ask him.
that's the overall goal.
Yeah,
As we know,
ask
Hey, Rob.
him. How do you grab your balls to short 15 ZB contracts into FOMC?
that are not related to tightness in the economy and therefore are not really good predictors of future inflation. So it turns out that
Or 10 NQ contracts into in the day after the elections.
So we look at core inflation because it's a better measure.
I'll
of
be right back,
what
guys. I
future
gotta go to
inflation
the
is likely
toilet.
to be likely
Can
to
I
be
go to the
because it's a better
toilet,
measure
please?
of what inflation pressures exist. So that's it's complicated, but ultimately our goal is headline.
So guys, pretty wild session here, to be honest. I am super pleased to be flat,
Headline can be affected
because there will be people who sadly have somewhere will have absolutely nuked their stuff today.
by energy prices and food prices. So that there will be things
Considering I
in the
was
headline forecast
literally net short from
forecast
yesterday's
energy prices,
POC
whereas
today
core will be if you look at core
at
going
one
out
stage
a full year,
on
then
the
it'll be
10-year.
much more driven by things like tightness in the economy.
Is this guy still talking?
That's why the two can go in different directions. I mean, headline has been lower, as you know, most of this year. But that's because energy prices have been coming down, which is a great thing for people. But energy prices will come down and they will go up, and it won't really be telling us anything about how tight the economy is and how future inflation will perform.
Do geopolitical risks factor in at all to how you're thinking about energy
So
prices?
we monitor geopolitical risks really quickly, but really carefully rather. But
The next couple of sessions will be interesting here. We're now completely out of whack. I think we're now basically at the election lows. Oh, pardon me. Let me just have a look and see where we are. And like ZB, I've not got previous data, not previous data. The rolled back data for December. So yeah, I mean we're just at the lows here. Let me just do this. So like down here is pretty much the low area.
Thanks, Chair Powell. Kelly O'Grady from CBS News. I want to go back to something that you said a minute ago, that wage growth is outpacing inflation now.
I'm going to minimize this off the screen for you.
It's partly why Americans haven't felt much relief in their wallets from prices yet. But with
So this is currently where we're at on ZB. If you look at it, just completely out of scope now.
So inflation, again, we don't
below the lows from election.
readings or a couple months of lower readings, and we had 4 months of really nice readings, and then September.
Let me just drag this up here.
But then November is much lower.
So we need to try and reclaim above this level. But in theory, it's going to be hard to get back up here. It'll be interesting to see what the PCE data is on Friday.
And they're right about it is that prices are just, the price level went up because of the past inflation, and it's going to take some time for real wages to recover over a period of years in which your real compensation is growing. And in other words, your compensation is growing meaningfully faster than inflation. That's exactly the kind of economy we have now, and we just want to hold on to it. That process will probably take some years, but
I mean, it is a good spot to buy if you're looking to, but it's just not the time to be buying
a couple of months of
treasuries
really
at all.
That anything.
But then saying that equities are melting as
I just
well.
want to follow up. Let's look more long term. You previously predicted hitting the 2% inflation target in 2026. It's now been pushed out to 2027. You said you're focused on enabling further progress on inflation. That's not necessarily progress in the right direction. Are you confident that target isn't going to move further out?
We're talking about when you're projecting the economy, 3 years out, 2 years out, you're talking about high uncertainty, very high uncertainty. We really, at that point, that's not possible to confidently predict where the economy is going to be in 3 years. So what we're doing is we're looking at what's happening.
More
now,
selling.
projecting that the same kinds of things are happening.
So yeah, did you guys trade any of this? Anyone else take any positions? Let me know if you think this was expected.
And
are you surprised?
Non-market services return to their prior level. All of those things should happen over time, and those pieces come together. There's every reason to think that they will. The timing of it is highly uncertain. But you're not wrong though. That it's been a bit frustrating.
Treasuries is cutting through prices like yes.
Slower than we had hoped.
At the minute.
Nonetheless, we're still on track, and I think if 2 years ago you'd said we were at 4.2% unemployment and 2.8% inflation, people would say, "I'll take that." I mean,
Be interesting to see what the VIX is at.
Place to be. Job's not done, but I think we're feeling good about where we are and where we're headed.
Go to Nancy for the last question.
Hi, Chair Powell, Nancy Marshall-Genzer from Marketplace. You said a couple times inflation has been moving sideways. Appears to be settling in around, 2.5%. Do you think the Fed is just going to have to settle for that and accept that you're not going to get to your 2% target?
No, we're not going to settle for that. I think we certainly have every intention and expectations that we'll get inflation back sustainably to 2%. That is, and I am confident we will achieve that. It has taken longer, but you have to be, we are making progress. We have made a great deal of progress, and we'll continue to do so and get back to 2% inflation. That's what we owe the public, and we're committed to achieving it.
In that case, can you rule out a rate hike next year?
You don't rule things completely in or out in this world. That doesn't appear to be a likely outcome. I think we're at 4.3%. That's meaningfully restrictive, and I think it's a well-calibrated rate for us to continue to make progress on inflation while keeping a strong labor market. So
we've got the ES close in 30 minutes. Where all the crazy algos come in, see if there's a bit of profit taking.
Finest hour. after reducing interest rates by 25 basis points straight out of the gate in that news conference, asked an obvious question. Why do this when you're expecting inflation to remain above target? The chairman acknowledging today was a closer call, that we've cut interest rates by 100 basis points across 3 meetings. The recalibration phase is over. We're in a new phase. Things are foggier, they're darker, you move more slowly. Well, this was the price reaction to that in the market.
There we go. Let's see if they go bid after he's done talking.
On the S&P, on the Nasdaq, down by more than 2. The small caps, some outperformance on the small caps going into the decision.
And then we still see if we can get a bid in bonds.
The small caps down by 2.8% in the bond market. Big move at the front end of the curve. Yields up across the curve. 2s, 10s, and 30s on a 2-year, up by more than 10 to 434.
Eurostoxx is also recovering a little
and off the
bit.
back of that, in foreign exchange, as you might
The
expect, the dollar
Eurostoxx
stronger
also
against
melted a
everything in
lot.
G10. Ripping up the
minus 30
euro dollar
points.
breaking down through 104 and
Wow.
threatening to do the same to 103.
Euro is
dollar
just
right
absolutely
now at
melted, isn't it?
103.64. We all had questions about the forecasts. Why have you bumped it up on inflation? Why are you projecting higher inflation than you were projecting back in September? Why have you reduced the number of interest rate cuts from 4 to 2 in the median dot for the dot plot in 2025? Is it about the data or is it about Donald Trump? Take a listen to the chairman of the Federal Reserve.
Some people did take a very preliminary step and start to incorporate
At least he said
highly conditional estimates
no
of
hikes
economic effects of policies into their forecasts
appear
at this
to be a
meeting,
likely outcome
and
next
said so
year.
in the meeting. Some
Rate
people
hikes
said they
does
didn't
not
do so,
appear.
and some people didn't say whether they did or not. So we have people.
I can
making
actually
a
see them
bunch of
potentially
different
hiking,
approaches
to be honest, if the
that.
data continues,
But,
never mind cutting.
Some did identify policy uncertainty as one of the reasons for their writing down more uncertainty around inflation.
Compare and contrast that to what you heard from the chairman back on
Minus
November
55,000
7th. We don't
delta on
guess,
the
we don't
VN
assume, we
for
don't
the
speculate.
session.
December
I
18th,
know, it's
some
crazy,
of us
isn't it?
guess, some of us assume.
Okay,
and so apparently, some of us
1.67
speculate.
million.
The WE is doing a lot of heavy lifting at a time where clearly he's reflecting a splintering committee that is dealing with
About
a whole
ZB.
host of different
ZB is
outcomes
actually
and potentially
It's just been no bids, hasn't there?
I just want to go here. This is
It's
going
not that
to
negative.
be viewed through a political lens inevitably. It already was
No,
threatening to do
neutral,
so.
zero,
Now there
close
are
at
some
zero.
people
Will
who
be as
are
well.
incorporating highly
Close to
conditional
zero.
estimates. I wish that we had learned more about what those estimates looked like and whether they all were inflationary or whether some of them were to slower growth.
Neil Dutta wanted to jump onto the program. We can bring him into the program right now. Neil Dutta of Renmac. Neil, is this Federal Reserve on a collision course with
That's
the
crazy. See how it keeps on doing that? That's like my absolute fear in treasuries when it does that. You know, it just sweeps like that. I mean,
He goes through a litany of indicators talking
what's the
about
VIX
how
at?
the labor markets are cooling, and then
Right,
he,
let me check out.
you know, in the
Must
same
be
sentence,
really
basically
high.
talks about how they're
Yeah, is it like 18 or something?
So I think that's
19,
that's a
close
Wow.
to 20.
And you know, I
Jeez.
think the optimistic take around this
1924
is
with a high
by
of
making the forecast
1969.
adjustments that they've made.
So
They're
up
actually, in some
4
respects, lowering the bar for additional action
from
you
15
know,
to
early
19
next year.
in a single session.
Like 2.5% on core inflation. I mean,
There is
that's a
so many
reasonably
sweeps in treasuries right now. It's
high
crazy.
number. And you know, given what we know
Like any,
about rental
you know,
inflation,
molecule
that's
of
probably
bidding
going
is
to
just
slow
getting
down.
smashed.
Given what we
You know.
about you know, consumer goods. You know, if you look at things like freight rates,
tomorrow.
it's probable
Let's
that
see tomorrow
consumer
if-
durable goods
Right, let's
prices
close this
moderated.
part here. Now that they're done speaking. Okay, so that's interesting. So they originally said a number of months ago they could potentially be looking at 4 cuts next year. Now it's cut in half. So it's all eyes on unemployment and to see what the new data shows. PCE will be interesting on Friday. But the hard thing is, I mean, how do we recover? How does the market recover back into that range now? You know, from a fundamental standpoint. Obviously it can, but you know what I mean. Oh, there we go. There's someone actually showing up on. You know, there's not been many many orders showing up actually. Come to think of it. But yeah, so how do we get back into that range that, you know, the market was in, right, from a fundamental standpoint? Now obviously you can't do that, but what do they need to see? I mean, the data needs to drop off a cliff. You know what I mean? It's so far away from Treasuries getting anywhere near where it was a couple of months ago. So it's almost like that's not going to be touched in a long time now. I think with I think that with the likes of Trump coming in, and then the big thing is going to be tariffs and immigration as to how that's going to affect unemployment levels. And then of course if the data remains super hot, then I can't see them cutting for a while, to be honest. Certainly not in January, that's for sure.
That's for sure, no. Absolutely.
And that's basically the way that we're feeling is why the market's just shit itself. Treasuries anyway. But a bit weird though, right? This is the hard thing about ES. ES likes growth, likes inflation, right? It doesn't mind, really. It likes cheaper money in general. So you never know which way ES is going to take it. It just solely depends these days on the option flows and the Mag 7s, doesn't it? So it's not honest at all, right? With the data that comes out, because generally speaking, like you can understand this is really strong for the dollar, which makes sense, right? And you can understand why treasuries are nuked, but then there's no reason behind the fundamentals for ES. It's just that all the Mag 7s must be down, right? Have you had a look at the Mags? Are they all bleeding?
Bleeding. Google, Amazon, Meta, all down.
How much are they down?
Amazon minus 3%, Google 2.37%, Meta minus 165%.
Wow,
Gold minus 2%, oil minus 0.33.
Gold is down 2%. Wow.
Nvidia compared to where it opened is up, but since the release, it spiked up today, but it's down 4%.
Wow, so it's had an 8% swing today.
Yeah.
Jesus.
Yes. Oh yeah.
Wow. That's unbelievable. And now we've had the bond close, and we've got 30 minutes till ES close, or equity cash close, and treasuries are still, the 10-year is just about to touch into the low session. Unbelievable.
Definitely a day to remember.
Really glad I didn't trade it though, to be honest. Like I said, I think you either got in at the start, mate, or because it's so easy to get it wrong. If you're buying that, do you know what I mean?
Yes.
And considering every single bid up has just been smashed with sweeps, it's like sweeping like 3-4 ticks at a time. So yeah, if anyone is still left in the chat, what did you guys think overall? Do you think it makes sense for what's happening in the market, or are you surprised by the moves? Is ES at least catching a bid at all? Or
no, straight down. Down 130 points now.
Wow. I wonder how this look at this. This is just still going here.
And no, it makes me smile that my profits in the last hour were longs. Very smile.
Yeah, exactly.
I bought 5 and I sold the 7. Well, I could have sold the 7 and
Yeah. I suppose the problem is, you know, when you're selling, you're like, I mean, who's selling into the lows here? Do you know what I mean? It's weird at this time of the day as well. Futures trader, yeah, it's been I've had a good what day is this today? Flat today for the session. Traded a bit like a muppet today, which actually is it's probably my I didn't lose any money or anything, but I just you just didn't perform well. I've normally been really on the ball for the last like six to 8 weeks, which has been good. So glad to come out flat. And FOMC days are always difficult. You don't really get that much direction. But this one I think is more of a red herring, to be honest. I'm just absolutely amazed that at this time of the day they're still hitting into the lows in the 10-year. It's crazy. What do you trade, futures trader? Alex, how's it going? Nice of you to join us, dudes. Brian, my brain is frazzled. Should I know what that means? 2ST equals 1ST. What does that mean? Sorry.
My first day, probably, or second or first. One of the two. Or second the first day.
Yeah. It's kind of like a riddle. Selling lows only doesn't work. Doesn't work on Sundays like today.
Down another 10 points while we were talking.
Nicely done, Alex. Oh, sorry, I just saw your message above, mate. Dan, I just saw your messages too. Very itchy fingers. Yeah, tell me about it. Very itchy fingers here as well. But I mean, look, they're just offering. Look at the amount of the offer here. Be interesting to see if buyers can clear that. I think I've already said this during the stream, but I think you either do the prep and you do the initial play, and you hit it, and that's it. I think there's so much room for error buying the thing, to be honest. And from my experience, if you are stubborn at all, and most people are, it's very easy to get screwed when you're trading this. Right. It's your second day to trade treasuries. Okay. Wow, if this is your second day to trade treasuries, this is like a, you know, this is a complete red herring, this movement. I mean,
not usual as well, at all.
No. Normally at this time, the 10-year is in a 3-tick range with 7,000-8,000 on the bid and offer at this time, and it doesn't move. I mean, the flows of bond close has already happened, and it's like you wouldn't even know. Well, it has slowed down a little bit, but so Dan, the initial prep that you need to do is you need to have a general idea of where the market is sitting in terms of data. and you need to know what the market has already been pricing in prior for the last couple of weeks, because of course the big funds are, they don't just wait for the data to come out. They're already have got a rough idea of what's going to happen due to their analysts, so they're then basically trying to give a rough range of where the market's going to be, so that they then decide that this is outside of value right now, so that's where they they sell into, which is why, see, the last couple of weeks it's basically sold off, because the market was pricing in two hikes, sorry, 2 cuts. But then the rhetoric when they come out, you need to kind of watch what they're saying. And I suppose in general the data's just been really, really strong, but it's hard to predict this, man. I mean, I've been trading this a long time, and you never know how much it's gonna go. That's the thing. But it's much more of just having an overall picture of the market, and how's the general data been, for, let's say, the last 4 weeks. Futures trader, nice to see some other UK streamers out there. You trade S&P, price action just for 3-point scalps. Nice. Nice, mates. Yeah, from sunny Scotland. Not so sunny at this time of year. But yeah, it's mostly US people, right, that do this streaming carry on. And I am absolutely hopeless at streaming, as you can probably tell. I can't even get a microphone correct.
Right. What? Yes, it's down another 50 points now.
50 points.
Total minus 170 for the day.
Wow. What's the percentage? How far away are we from the cap?
Oh my goodness.
No, it's miles away. The NQ's down nearly 3.5% today, right?
Yes, it's down 3% so far now from the top. 3%.
It's before lunch they can halt it, right? After lunchtime they don't, or do they need to halt it? What's the exact rule with that on ES? I think it's like after in the PM session they don't halt at all, right?
I don't think so, no. So yeah, it can fall indefinitely now.
Wow. 150 points.
170. 170 points, sorry. Wow. How much in Q? 1,000? Let me check out.
That's crazy. Another 40 points.
I didn't see something like this in a long time.
No, I mean...
And AQ is down 800 points.
Wow. Holy smokes. What is it down on the session? Because actually, what's it down percentage on the session? Because I'm looking at TradingView right now, and their measurements off, I think.
The percentage, how much is down?
Yeah, is TradingView correct? 3.5%.
Yeah, it's correct.
Correct. Did they work out on the session?
Yeah, they're counting from the overnight. Yeah.
Yeah. Okay. That's absolutely bonkers. I'm just gonna go into this and quickly change.
Absolutely bonkers, man. I don't remember last time when something like this happened.
I mean, it's well overdue, isn't it?
Yeah. It basically erased the whole rollover gap. Then at least 1, 2, 3, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 days of upside or range erased.
Jesus.
And it keeps falling.
I mean, what is the VIX? Is the VIX above 20? It must be now.
Must be now, yeah. Check out. Basically, 23.
Wow. What is it that the algos can cut off at 25? If they want.
23 is the triple top that we had between September, October, and November before the fall after the elections. So it's almost about to break that. We are like 0.25 from that.
This is absolutely crazy.
No, I need to correct. I never seen something like that after FOMC. Not so much. No, never.
Just basically ridiculous amounts of profit taking into the, you know, and probably year end profit taking as well, to be honest. Because this is actually, now you think about it, this is the last big volume event before the end of the year, right?
It triggered so many stops on the way down, and then overall they started to it just keeps falling. We have still 15 minutes left in the session, and this thing still keeps falling. It can fall another 20 points.
The Treasury seems to be chilling out a bit now. There's been absolutely no selling here in the ultra 10s here. Yeah, we've seen a bit of a slight recovery.
Yeah, VIX officially broke its triple top, nearly 24 now.
Wow.
From 15 to 24 on VIX, right? Wow.
A nice hedge would be to use options to basically buy volatility prior to this, wouldn't it? Because this was always going to be a volatile event. You just don't know how. Crazy.
And they're saying the breaker is at 5%, so it can fall another amount.
Yeah, the breaker's 5%, but is it not? I think it's like 5% in the morning or something, and then once they halt it, they give it like 30 minutes, and then after that in the PM session, it can free fall to what it wants. Right? Is it something like that?
Something along those lines. Which, yeah.
What a day to be a prop firm owner, I'll tell you that much. What a day.
Ooh. They're gonna bank reset new accounts.
Oh yeah.
FOMC sale.
I know. Crazy. Tempted to bring up the ES chart. Actually I will, because there's nothing happening here. Let's bring that up. I'm going to save this file, save all, file and close. Yes. Then let's have a look at ES. I'll bring up the ladders here.
I think that I'm
Wow, this is wild. Right, I need to make sure that I've got Sim on here or something in case I press any buttons, mate. I know.
Wait, guys, I think that I have to go.
No problem, mate.
It was nice doing this FOMC madness with you, and have a good night, guys.
No problem, mate.
Bye bye. Catch you later and tomorrow.
Cheers, mate. This is yeah, this is H. Cool. Wow, I need to. This is absolutely wild. I mean, how can anyone trade this? Look at this state of affairs of ES. Wow. I mean, NQ doesn't even have a bid and offer anymore. And people ask me, why do I not trade NQ? Look at this. I mean, if you guys blink, that is moving. That's moving you know, almost a full daily range of treasuries in a blink of an eye right now. And we've still got here's the injection coming in now in 30 seconds time. Wow. I'm hoping that you guys look at this and you're just like, this is not tradable, right? There's no... This... You would actually have a higher probability just putting your money on black right now at this. Yeah, exactly. I mean, look at this. Wow. Exactly, Dan. It's crazy. You pretty much can only use an algorithm to trade this, in my opinion, when it's like this. Right, I need to make sure that I don't click any buttons here. In fact, I'm actually going to put it on sim, just in case I do. Get this away from here. It literally gives me the heave, in case, you know, I misclick or something and I get with a full clip or something like that. It would be a disaster on this. Of course they put out a sale because everyone's just nuked their accounts. So this is what it looks like to be VIX 25 right now. And look at those brave souls placing 100s. Wow, it's no, oh my gosh. That's basically all of the election gains that dust. And actually, the news that came out was actually relatively good for equities, to be honest. You know. Surely get a little bit of a recovery towards the end of the session. We've got 7 minutes till the algos come in, and let's see. Yeah, we seem to be trading out here at the minute. We'll see if we can crack the lows again. Would be incredible if we hit the lows again. So if you guys enjoyed the stream, FOMC's, well, I don't want to say always fireworks, but this one's been exceptionally special. Over 2 million contracts in yesterday. This is standard deviation lines here. So this is VWAP. We're so far away. This is standard deviation. So we're currently at like 4 standard deviations. Of course, when the market does things like this, you might as well just throw every single indicator out in the bin. No, not really, mate. I mean, honestly, when the market, see when the VIX, you know, your number one thing you should be watching if you're trading ES is you need to be watching the VIX. So as soon as, in my opinion, as soon as the VIX gets above 18, it's time to walk away. In my opinion, especially above 20. I mean, the VIX just broke 24s, which look at the book. There's basically none there. The market just becomes, you know, completely market order driven. And this is why prop firms tend to fail, and people have got no idea about order flow. They think, oh, you know, they go in like 10 lots or something on NQ or copy it across 20 accounts. I mean, look at the book. There is nothing there. If you had to trade actual size on NQ right now, you would literally, you know, it's like getting thrown into the sharks. No problem, Dan. Cheers, buddy, for hopping on. Bit of absorption here. Let's see if he's going to hold. At 59s. We've got 2 minutes till they close the sesh. Wow, here we are. We're hitting the lows again. Nice. my head tells me we're gonna, you know, we're gonna basically try and finish about, you know, we'll probably finish like here, maybe a bit higher, but my heart wants it to go and break the lows. See if we can finish at 80s, or is it just going to continue melting? $400, wow. It's just non-stop, is it? Wow. Ten seconds. Jesus Christ. Speechless. But it's great action to watch. Wow. This is so wild. Oh my god. This is just not stopping, is it? Well, you definitely know what's going to be in all your local news channels tomorrow. Stock market melts. Mag 7s dust. $29.93. I just can't believe how much this is falling, mate. Oh, you talking about NQ, Craig? This is continually going. Wow. This is just a complete capitulation. I mean, let me bring this up. And let me go to like a 4-hour chart or something here. Of course, I've just rolled over. That's too much faff. Is it still going? Oh my. NQ, no problem. I don't know what to say, guys. This is crazy. We're literally witnessing a complete unwind of Mag 7s right now. End of year profit taking galore. Great time to be buying ES, not this session, obviously, but for a long-term hold, it's a good time. Because stocks will probably go up next year. Or when is the AI bubble going to burst? Wow. Jesus Christ. I mean, it's literally not even caring that it's past close here. Right, is that are we gonna stop now? Here's a bit of, you know. Yeah, there we go. Yeah, is that the bottom put in? I'm just going to measure here how many ticks this is here. Chart calculator. We're working our way back down to the lows again. Amazing. 221 points. My God. Guys, I suppose there's not really, I'm just, I don't know if you guys are just enjoying watching, but this is unreal. Surely now. Every single bid up at the moment has just been smashed. What do you guys think? Interesting to hear everyone's thoughts of what's happening. This is the biggest capitulation I've seen in a long time. Do you guys remember, I can't remember what day it was, a number of months ago, it was like a Monday or something, and the market just absolutely tanked. This has been the biggest sell-off since then. We nearly hit the breakers that day. The Nikkei, I think, did. Interesting to go and I'm gonna go and check the Mag 7s once stream's over to see what's happened. Are we gonna probe the lows again here? Yeah, NQ down 1k. Jesus. What's it down on the session now? Let me have a look. Trading view is correct for the setup, right? Yeah, it's nearly down 5%, 4.3% to be exact. S&P's 3.5. 1% move in the 30-year Treasury bond. Two-year looks to have recovered a little bit. Yields are up 2%. Wow. Jeez. Crazy. This amount of volatility, I'll see what the action looks like tomorrow, but I might call it for the end of the year in terms of actual trading until we get some chilled out action. Yeah, see this downside here, like the news fundamentally for equities was actually good, you know. This looks like a year-end, you know, profit taking, and the mags are bleeding. I've been saying this for a while, but this year, the stock market has literally got to where it's, you know, the highs continuously on the Mag 7s. So the other, you know, 493 stocks that make up the S&P have got such a small impact. They've actually had a relatively balanced, if not negative year. If it was not for the top 7 big boys, we wouldn't be doing anything. Well, let me know if you guys have got any other questions. I think that pretty much looks to be us. If we continue to break the lows now, I mean, we've got 50 minutes till close. Surely, to goodness, I mean, cash close already happened. Be surprised if this continues to dump. NQ's maybe saying hold my beer, though. Yeah, no more downside, looks like. Okie dokie, guys. I hope you have a great evening. We'll catch up tomorrow. We'll be streaming tomorrow and Friday, seeing as we missed Monday. So we're trying to get 3 days in a week at the moment. So we'll stream tomorrow from same time, about 2:30, 3 o'clock. No, sorry, 1:30, 2 o'clock. US time. And if you've got any other questions, just reach out to me and let me know. If you want to support the channel, there's a link in the description. Until then, I hope you guys have an excellent rest of your evening. Don't do anything I wouldn't do. Peace, everyone.